Imagine the stock market is crashing. People are panicking. Businesses are shutting down. Jobs are disappearing. Your retirement savings are shrinking before your eyes. Now imagine a different group. Global banks, they're not panicking. In fact, they're making money. Lots of it. How? That's what no one tells the public. And it's not just luck. There's a system behind it. A system that thrives when economies fall apart. You've heard the headlines. Markets tumble. Recession hits. Your government injects trillions to stabilize economy. Most people see this as chaos, danger, or just bad news. And yes, for millions it is. Savings vanish, companies collapse, pensions shrink. But here's the uncomfortable truth. Global banks often come out ahead, and not by accident. This matters right now because the world is facing rising inflation, geopolitical tensions, and shaky markets. If you understand how banks profit in a downturn, you start seeing patterns that everyone else misses. Let's rewind to 2008, the financial crisis. Housing markets collapsed, millions of Americans lost their homes. Meanwhile, a handful of global banks walked away with billions. How? The system allowed them to. It exposure to both sides of the bets. While ordinary people lost everything, banks had hedges in place, insurance contracts, derivatives, credit default swaps. In simple terms, they made money when others lost it. This isn't isolated. It's a repeating cycle. The math is built into the system. Step 2. The mechanism, 4 o'clock to 7 o'clock. Here's how it works. Banks do 3 main things during crises. Shorting assets, they bet against things like housing, stocks, or bonds. If the asset crashes, they profit. Buying distressed assets cheap. When a company is failing, banks often step in and buy debt or assets at a fraction of the value. Later, they can sell or restructure for a massive gain. Government bailouts and central bank support after the 2008 crisis. Governments poured trillions into stabilizing banks. Taxpayer money effectively covers their risk, so they profit with limited downside. Every step is legal. Every step is systemic. And the math is brutally simple. When everyone else loses, banks often win. Step 3. Hype versus reality, 7 o'clock to 9 o'clock. You've probably heard pundits say, the market crash is bad for everyone. It's true for small investors, retirees, and middle-class workers, but not for big banks. The reality is almost ironic. The more panic spreads, the bigger the opportunity for these institutions. Think about it. Fear drives sell-offs. Prices drop. Banks swoop in. That's not speculation. That's the system exploiting volatility. Even programs designed to stabilize. Markets like quantitative easing often disproportionately benefit banks over ordinary citizens. Step 4. Bigger implications, -9 o'clock to 12 o'clock. So why does this matter to you? Because the system isn't broken, it's designed this way. Understanding it changes how you approach your money. It means your savings account will never beat inflation during crises. Your 401k or pension is vulnerable to systemic shocks. The global financial system has winners and losers, and the rules favor the banks. And it's not just numbers. It's human behavior, politics, and psychology. Fear, uncertainty, and herd mentality are all baked into the profit model. Step 5. Closing twist. 12 o'clock to 14:30. So, next time there's a headline screaming about market collapse, remember, for some, collapse is opportunity. Banks aren't evil. They're playing the game the system allows. And right now, millions of ordinary people are unknowingly funding their profits through lost savings, bailouts, or market volatility. The question is, how do you play your part wisely in a system that isn't designed to protect you? Because if you don't understand the mechanics, you're not just losing money, you're funding someone else's gain. That's the uncomfortable truth about how global banks make money when economies collapse. The system is real, the math is real, and the consequences affect everyone. What will you do differently the next time the headlines scream crisis?